So I've been through 2 market crashes in my life. One was before I was an actual investor and one when I was an investor. So while I have some experience with the stock market going down, I think that this one is a little different to what we've experienced in the past. So in this video, I thought I'd talk about how those 2 past crashes, what they were like for me, also how other people around me were reacting, how I was feeling, and then sort of compare it to now, just in case it helps anyone. So my first real experience with the stock market was back in 2000. I wasn't an investor at the time, but I was working for a tech company. I actually had no real thoughts about the stock market then. I was young. So this particular tech company that I worked for was about to float on the exchange. And as part of the initial public offering, they also offered anybody that worked at the company a parcel of shares. So we had the option of taking them as shares or selling them back to the company and taking the cash. Now I can't remember exactly how much I had. I think it was only about a few $100s. I think it was around $400 or $500. I wasn't high up in the company, so I wasn't getting a huge amount. Some of the management had quite significant amounts. Anyway, because I didn't know anything about the stock market then, I took the money. And all of those people around me were gloating because the stock price was going up, and it was going up quite quickly. And after about 4 or 5 months, they did a second offering to staff because the stock price was going through the roof and everybody wanted to get back in. So the second offer for me was about the same. And this time I kept it, and it did. It went up during the following weeks, and I was feeling good about that, even though I really had no idea what was going on. But as we now know, a few months after that, the tech bubble burst and stock prices crashed down. Of course, I lost that money, but that's nothing compared to some of the money that the management and other people in the company had held during that time. The company did eventually fold, as a lot of other tech companies did at that time. And of course, I lost my money with it. I never got anything back, and same with the people that also worked in the company. So a few years had passed, and I did actually end up getting interested in the stock market. So I'd been investing for about 6 years or so. I'd had a healthy amount in the stock market because I was working full time and continuously putting money into the market, and my stocks were doing well. This was obviously during a rise period. And I was really happy with where things were. Then in September 2008, the global financial crisis happened. So this time I was an actual investor. And I had the same reaction as most people at that time. I was nervous, I was unsure, I was confused. And it really made me think back to the people that I was working with in 2000 and how they'd lost all of their money. And of course that played on my mind. So yeah, it was the first real time I had money in the stock market. So of course I was worried at that time. Now, so over 16 months, the All Odds Index fell about 54%. And not surprisingly, my portfolio halved at that time as well. Everybody's did. It was 16 months of decline, and it felt like it was never going to end. Australia was really lucky that we didn't enter a recession at that time. We didn't experience the massive job losses. Our housing market didn't crash at that time. We still had good trade relations with China, and the economic stimulus package sort of helped boost things. But still, everyone was frustrated and angry. That happens a lot when people feel out of control. They often lash out because they're scared and they're unsure. It's understandable. So that year and a half was tough. It was my first real experience with a crash. Every day you would hope that things were turning around and there'd be little spikes up and you'd think, this is it, it's going to go back up, and then it'd fall and dash your hopes again. But as we know in hindsight, and logically if we look at any stock crash over the course of history, the market did recover. If you look at the data, this was a particularly long time to recover. I think it took 6 years from the peak before it fell to get back up to that level again. Although like most investors, I had been buying all the way on the way up. So I didn't only buy at the top and then have to wait 6 years. Obviously my money had recouped well before that time and then went on to make a profit. That's what most people would do. It's very unlucky that you would buy the day before a crash. Most people are buying at various intervals on the way up before it falls. So that brings us to now. So what we're dealing with now is a lot different to what I experienced back then. There's a lot of uncertainty and of course fear, because this isn't just an economic disaster, it's also a health one. And while the coronavirus is still a major part of all the panic selling, there's still other factors. There's the oil uncertainty, corporate debt, just general economic uncertainty. So there's a whole host of factors. But make no doubt that the coronavirus is the one that's causing the volatility right now. So it's totally understandable why people are scared and worried and unsure of what's happening. The government only has to give us different information and the market reacts really quickly. If the government comes out with something that they don't like, the market will fall, and if it's something that they do like, the market will rise again. We've seen that this week on Sunday night when the Prime Minister made an announcement that they were closing non-essential businesses in an effort to stop people congregating and to enforce social distancing. The stock market reacted by going down. Yet he made another similar announcement on Tuesday night, and people were happy with that because they felt he was displaying more leadership, and the market went up. So that's how people are reacting right now. But how am I feeling right now? Look, I know this will end. It's just a matter of when. I don't know that, and I don't know how long it's going to take or what's going to happen in the short term. It's certainly not fun to see your portfolio go down, but I'm really not concerned about that right now. How I invest hasn't changed. It's always been time in the market for me rather than trying to time the market, because that's not even where my focus is right now. So my focus right now is just keeping those around me safe and healthy. I worry also about the people that are losing their jobs and what that's going to do with the economy in the short term. So I kind of think of it as a tier system of where focus should be. So the first at the top should be people's health. It's first physical health in minimizing catching the virus, and then keeping those alive that do have it, and of course not burdening our healthcare system. But there's not only a physical health element to this, there's also mental health. A lot of people aren't dealing with things very well right now. They're either not willing to accept the gravity or they're freaking out and panic buying. Look, I get it. It's just a way for people to try and feel in control. The second thing that should be a major focus is people's livelihoods. Once we've got health back, we need to start considering how to get people back into jobs, back into earning money, because that is the beginning of getting the economy back on track. It's only then that we can worry about our stock portfolios. We know that the stock market is going to go back up eventually. So let's focus on the other two first. 12 months, 18 months, that is not a long time when it comes to the stock market, but it's a very long time when we're considering people being out of work and not earning an income. I kind of wish the government would just enforce a total lockdown. The sooner we can curb the spread of the virus, the sooner we can start getting back to normal life. But I also like to think about all the businesses that are doing well right now. And I don't mention this to try and minimize all of those closures that have happened or people have lost their jobs, but just to put things into perspective. So things like home entertainment, streaming services, buying movies, alcohol sales are up. Online buying has increased, so there's more need for logistics and freight and things like that. Food home delivery has increased. Supermarkets can't keep certain products on shelves, so production has ramped up. People working from home means a need for better tech, home office equipment, home office furniture, plumbing supplies, especially those that have bidet attachments for your toilet, freezers for all the people that are now home cooking. Again, I'm not trying to minimize the fact that many industries are suffering right now. I just wanted to put that out there in case that brings some comfort to people to know that not every business is failing right now. So that's really where I'm at. Nothing has changed for me. Investing wise, I'm still doing the exact same thing. It's just not my main focus right now. Like I said, 12 months, 18 months, that's not a long time in the stock market, but it is a long time for people who are suffering in other ways. So stay at home, keep yourself safe, practice calmness, and just be kind to others. Have a great day, and I'll see you in the next video. Bye!